All right, hello everybody. I'm just Kit Price, and I'm gonna do my question for the week. This one comes out of chapter 4, and this is exercise 23. I'm gonna share my screen real fast, and we'll get this started. All right, so I have this copied over into an Excel file that I made earlier, but this is the exact question from the homework. And so to start with, what we're going to be doing is we're going to be closing accounts and debiting and crediting to the retained revenues. So this is a quick review. These are screenshots out of the books. This one says, in addition to updating retained earnings to its correct ending balances, closing entries produce a zero balance in each temporary account. So the ones I've highlighted, the dividends, the revenues, and the expenses are all temporary accounts, and we're going to be producing a zero in each of those and transferring them over to the retained earnings account. Another part of this book, it also talks about how the balance of the income summary is the net income or loss for the accounting period. And this whole process basically down here says it can provide companies with accurate data for decision making whenever they desire it. It lets them know what their retained earnings are at that point in time. So we're going to start by doing that. We take a look at the Excel sheet. Down in the action answer section, where you can type in, the first one says to close the revenue accounts. So we're going to go back up here to the top and find where our revenues are. I've highlighted them in green. So, and what we need to do at the top here, this is just before adjustments, this is after adjustments. We're going to be working with the after adjustments. They've taken into account adjustments in their company, and we're just going to use the numbers that we now have. And so the two revenues that we do have are the service revenue and rent revenue. So we're going to type in service revenue. Okay. Remember, we're zeroing the temporary accounts, and to zero this credit, we have to debit the amount that's in there. So we're going to debit 33020 and 13350. And since we're transferring this over to our retained earnings, both of our revenues and our expenses, we're going to have this as our income summary. So out of the book, there's a picture. It's really nice how it explains it. Service revenue and rent, or your revenues and your expenses go into your income summary, and then those, along with the dividends, end up becoming your retained revenue. So if you do the math for those two, it's 33,020 plus 13,350. That means we're going to credit our income summary. We're going to do the opposite here. We're taking this from those two accounts and putting them into our income summary account. Is 46,370. Okay, and now we're going to move on to our next one. These are our expenses, and since the natural sign of expenses is debiting, we're going to credit our expenses. Now, credits always follow the debits, so we're actually going to put our income summary first. Don't know what this amount is yet, so we're just going to leave that there. I've highlighted the expenses in yellow, so we'll fill those in. Border here. All right, and as I said before, zeroing the temporary accounts, and so we're going to credit these ones, same amounts as the adjusted. Now to find out how much we debit from our revenue for our income summary, we're going to add up all those. Which will give you 39,180. Okay, and now we're closing our income loss sheet, which means basically we're gonna take what we've credited and debited. So we've added basically 46,000. That's our credit to our income summary, and then we've debited 39,000. And so we're gonna add those together to find out how much we're going to add to the retained earnings. And so we are going to subtract those from each other. Which equals $7,190. And so this is what we're going to take from the income summary. That's our total in the income summary, if you will. And so we're going to debit our income summary, 7,190. And we'll add this to our retained earnings account. We're going to credit our retained earnings account that much. And then finally, we're going to look back up here, and I've got it highlighted in blue as our dividends. And our dividends come out of retained earnings, and so we are going to debit the amount of retained earnings, or debit the dividends from our retained earnings. And so our retained earnings are going to be on the debit side this time. Oops, I don't think there's a count there, but it still means the same. So we're doing 2,540. We're taking out our retained earnings to pay our dividends account. And so we're going to credit our dividends account, 2,540. And that's basically all there is in the problem. If you take what you have left in your retained earnings is what you have as a company in that time. You retained earnings, and lots of companies will use that, as we saw in that quote from the book. They'll use that to see and make business decisions at any point in time of the year. So thank you guys for listening, and I hope you guys have a great day, and post any questions that you have on the discussion board. Thank you very much. Bye.